afternoon, everyone, and welcome to another edition of Beyond the Bell. It is Monday, April 1st, 2024. It is 60 seconds after the bell, which means it's time to go beyond the news, beyond the charts, and beyond the bell. We are back after, it wasn't a long weekend for the show because we usually don't broadcast on Fridays anyway, but a long weekend for the markets, and boy, were we ready for last week to be over. Just mostly, not all, but mostly just garbage market movement for the week last week. And we started off today with some great movement, some little early movement up, some movement down. Just, man, a day. I'm going to review some of my trades for today. I teased in the Discord. The first trade of the day I made, so first trade of the day, first trade of the week, first trade after last week's just debacle, right? And for me, a disaster or debacle trading is not when I have losing trades, right? I trust in my ability to identify setups, keep my losses short, et cetera, et cetera. But to me, garbage and disaster trading days are when there's just not that many opportunities. And last week, because of the holiday weekend, because we were post FOMC, but we're not quite to OPEX for the month, a lot going on. But this was just sort of an oasis in the middle of a lot of hecticness that has and will be in 2024. So it's really nice to get back to some market movement. So with that in mind, guys, let's go ahead and go to the big picture. First of all, guys, we are, as always, brought to you by our good friends at the Blue Sky Trading Company for the clearest path to a live brokerage account, live trading with Mike every day in the Discord. And this awesome show, there's no reason for you to get your education, your evaluation, and your brokerage account anywhere else. It is an interactive show as well. I always take questions throughout. So, Mike, nice to see you. Drawdown King, nice to see you guys. Tio, nice to see you as well. Trade Up to Crypto, Club Trading, James, Paul, Tyler. Man, great to see. This is great, guys. I love regulars. So for those of you that are here on a day-in, day-out basis, I really appreciate it. Hopefully, if you're here on a day-in, day-out basis, you must be getting something out of the show. So I really appreciate you guys being here. MP3, nice to see you as well. James stayed on the sidelines. That's all right, James. I used to do that, actually. That's an interesting point, and I'll do a quick aside here. After prolonged times of not trading a whole lot, I would sometimes take a day and just sort of watch, just observe, et cetera, et cetera. As it is now, I won't necessarily do that on a day-to-day basis, but like on an hour-to-hour basis, right? Like last week, there were plenty of times where the markets weren't really moving, so I said, you know what? I'm not going to try to catch the first move out of consolidation, right? Because sometimes that happens without warning or without rhyme or reason, especially in low-volume scenarios. So I was more about, okay, let's let the first move out of consolidation happen, and then we'll catch either a confirmation of that move or a reversal of that move based on a whole variety of factors, et cetera, right? So nothing wrong with that. Brian, nice to see you as well. Tiana, always nice to see you. Appreciate the bells in the chat. You guys know how much I like that. Also, make sure you, if you're not already subscribed, to subscribe to the stream. Also, please like this stream. That helps us get out there, helps us get our message out there. I can tell you guys it is, as somebody who's been a veteran of the education business for quite some time now, getting a solid message out amongst all the people who are, quite frankly, just preying on you for multi-$1,000 subscriptions and stuff like that can be really difficult, right? You're not going to see me. I mean, you will see. Actually, I'm going to, in a couple minutes, show you some of my trades from today. But you're not seeing me splash up all these big flashy numbers and basically saying without saying that you can just do what I do and you can have the exact same success, right? And Blue Sky themselves will tell you how difficult trading is, even though, of course, they want you to get an evaluation and hope that you make it to the brokerage stage. But getting that type of message, the message you hear me say on this show multiple times every week, you have to do the work. It's not a popular message. Right? A popular message is in 10 minutes you can make 1.4 million. You guys have seen it all and heard it all. If you've even been in this business for 2 or 3 months, you're on the same email list I do. So make sure you like and subscribe. Helps get our message out there. It helps kind of cut through all the noise and the BS, which is what we try to do on this show. But as far as the big picture, guys, sort of the markets moved today. We'll look at that on the 5-minute chart, and then I'll show you the Renko chart where I made 3 different trades today, or 4 different trades, excuse me. But guys, this is, I don't like to use the term predictable, but this was fairly predictable. We're sort of trapped we're really in about 150 point range here, right? So I've got this, I've got the 18,500 area. This blue line is the top of the lower range, right? And you can see how price has really been sticky towards this level, right? Especially last week, we kept coming back to this 18,500 level. So every time we got back to the 18,500 level, we were looking for a move away, which sometimes we got, although sometimes not much of a move. And as we got a little further away from 18,500, we've looked for a move back. And sure enough, guys, look today, right? Consolidation kind of, this is late last week in the Sunday night session, guys. Just a lot of consolidation. And then when the markets opened, sure enough, guys, we ran right back down to that 18,500 level, okay? And then we moved far below it, all the way, well, not far below it. Actually, we just got about 80 points below it. And then look what happened, guys. We went back right back to that 18,500 level. As we sit here, as we're talking, you know, we're basically back at that level, you know, and we don't care if the markets get sticky towards a particular level or zone, et cetera, et cetera. We just want nice movement away from it, which is what we, you know, and then we can play the movement away, and then we can play the movement back towards that area, which is exactly what happened today. So I want to give a little bit, I want to break down just a couple of things before I open things up for questions, guys, is you guys know on this show, I always try to give you guys kind of a macro take, as I call it, the 10,000-foot view, right, of the markets in general. And I'm quick to tell you guys, that's not always actionable, right? We can have a bearish thesis, and that doesn't mean we only take short trades. But when we have, again, a trade is where a thesis meets a setup. And when my macro thesis matches my thesis on, you know, the 5-minute or the 10-minute or the 15-minute charts, and then I get a trade setup, it just puts me in a really good place to get, you know, confidently take trades, confidently hold trades even when there's a little bit of red showing on my screen, and then confidently exit those trades and or hold certain parts of those trades through to a nice trade. So I want to just show you guys, I'm going to pull up my trading journal here. We're not doing a deep dive on this today, but I just wanted to highlight what we've got so far. Okay, here's my drawing tool. So guys, this was today in reverse chronological order. This trade here was my first trade, and it was a loss, and it was not a very smart trade, okay? And I'm not going to break down a whole bunch of, you know, here's what I was looking for. You know, it's you know, I have courses that go over my setups, guys. But in this particular scenario, I was taking a long trade, and I was sort of overthinking the market, right? Because as you can see here, my entry on this trade was right. First of all, this is not a very smart entry on my part. Okay, for those of you that can't see, this is 18,599.75. So this is literally an entry, 25 basis points right below 600 for 100 level in the chart, which is not really smart to do just for a variety of reasons. But you can see after that, 3 straight nice 4-digit winners had me one of my nicer days, not my best, but one of my best trading days of the year. And so specifically, I've got these trades labeled. You can see up here was my entry. And Renko charts don't always show all the price action. That's why you know, they're better at showing trend and strength of trend, in my opinion, but they're not as good as showing all the price action as candlesticks do. By definition, they don't show, depending on your time frame, they don't show all the price action that candlesticks do, right? So I'd gotten a long entry as we broke out through here, and I almost immediately stopped out of the trade. And as I'm looking at it, I'm said, this is not actually a long entry. This should be a short entry based on this factor here. Okay, I don't have this labeled here. We took, at the open, a move from the -2 standard deviation band of VWAP all the way up to the +1 standard deviation band in about 10 minutes, right, in 2 candles here. And after 2 of these candles showing what I like to call, this is a pattern I like to call a multi-wick rejection, right? So an area, we meet an area of resistance, in this case, right around the 600 level, right? And we get these selling tails that pop up on these candles, right? So what does this tell us? Here, basically every 5 minutes at least for a 20-minute span, we were trying to push up above the 18,600 level, guys, and we just couldn't do it every time sellers stepped in. So this was my entry candle for long, and that's a really dumb candle. It just wasn't a smart trade on my part, right? And as we identify this pattern, I got a short setup here. So, you know, was able to take it. I had to sweat this one out a little bit, guys, but it ended up being a pretty decent trade. Took a short entry here. I believe another one down here. It's a little easier to see on the Renko chart. I actually, as I said, I have these labeled here. And that's even with me missing one of my key setups there. So, where's that? Yeah, 1, 2, 3. Right. So, again, pretty... yes, James, it's just a regular VWAP. It's fixed. It'll restart So when the markets reopen here, what is it, 6 o'clock Eastern, the VWAP resets. I know some people are big on anchored VWAP or VWAP over weeks, so that it's just, and I'm not here to tell you that does or doesn't work. I'm just saying it's not what I use. Using just a one-day VWAP can be a little more volatile. You're going to get some more false signals, but you're also going to get more trades. And again, when I trust in my ability to manage trades, again, that's my edge, guys. I don't sit here and take big losers throughout the day. I know when maybe, like last week, I wasn't in a good position to trade in a lot of situations just because of market movement. So again, I would be willing to tell. I'll be the first one to tell you guys. You go find. A lot of people, maybe their strategies work a little better than mine, right? But at the same time, they may not have the mental capacity in terms of emotional, the ability to manage emotions, ability to not take big losses that I do. I do spend a lot of time on strategy development, but I spend even more time making sure I have the right mindset to sit down and trade. It's trading psychologists and people who study those levels will tell you, and again, the preface to The Disciplined Trader by Mark Douglas, the gentleman who wrote that, basically said, give a mediocre trader with great emotional maturity, stability, and ability to know when to trade, right? Give that person, I shouldn't say a mediocre trader, but give them a mediocre strategy. They're going to make more money than somebody with a great strategy that does not have any control over their emotions. Now, I'd be willing, I have an ego. My strategies are a little beyond mediocre, but if somebody were to tell me, hey, I got a strategy that works better than yours, I'm going to be like, yeah, okay. I hope it does, and I hope you have the ability to trade it. But it's more important to develop those again, the ability to know when you should or shouldn't trade, right? Negative 6K today, club. I hope that's I hope that's eval. I don't hope you blew an eval, but I hope you blew an eval versus 6K in a personal account. That's a rough day. I don't think I've ever lost that much trading futures. I have lost that much trading stocks several times over, not in a day, but over the course of many months. So again, guys, I say it all the time on this show, and I'm certainly no dummy, although I probably have people that would dispute that. But I'm rarely the smartest person when I walk into a room, which they tell you, if you're the smartest person in the room, go find another room, right? And if I can do this, guys, you can do this, and that's the honest truth. So make sure you don't give up, and you just kind of keep going from there. Yeah, 6K, club. I want to dig into this, man. I really do. You don't have trade up to cryptos, right? You don't have a stock like newer traders, guys, because I get asked this all the time. You know what? We're going to make this our lesson of the day. Okay. Newer traders, guys, don't always have, a daily profit target or a daily stop loss. And I am of the mind that as you get consistently profitable, you should not have a daily profit target, right? Because let's say your daily profit target is $500. Maybe you hit that on your first trade of the day and you're like, well, I'm done trading. Well, why would you do that when your next trade may get you to $1,000 or $1,500, or you may have a $1,000 trade that is your next trade? Why limit yourself? Now, that being said, if you're a newer trader who has the problem of letting small loss days turn into big loss days, like 6K down, right? Or more so if you're somebody who lets decent green days and you overtrade as the day progresses and they end up turning into red days. So let's say if you're somebody who has a lot of days in an eval where maybe you're up $800-900 at lunch and you finish the day down $200, then maybe having a daily profit target is a good place to be. And in like in Blue Sky's eval, some of the consistency rules that they have, those actually function as that for you, right? They have daily stop losses and they have daily, a daily consistency rule to get to the blue lives. And those can actually be very helpful for newer and more inexperienced traders, right? As you get a little further on, it definitely is something that you don't necessarily want to do. However, I know traders that have more experience than I do and are more profitable than I am who do have daily stop losses. Now, what do I have built in to make sure I don't have heavy trading days? Well, first of all, I have an 0 for 2 rule. If I start the day 0 for 2, I'm in a 30-minute timeout, right? Just like a toddler who ate too much paste. Right. So if my first 2 trades are losers, and guys, I actually got six ticks on the NQ away from my second trade of the day being a loser today, and that would have triggered my, that would have ended up being about an $800 loser as opposed to what ended up being about a $1,300 winner. Listen, I have a lot of skill, guys, but some days, just you will have equal amounts of luck in this business the more you stick around, guys. But it's 2 parts skill and maybe a half part luck from time to time. But having those particular sets of rules in place help me to not, because if I start the day over 2, I do get a little frustrated. I get a little upset. It doesn't happen often. I think it's happened maybe 4 or 5 times this year. And more often, I end up either 2-0 or 1-1. And again, if I can just keep my risk reward ratio and my winning percentage in a pretty good spot, then I'm going to be doing well. So yeah, at a club, I don't know if you're still there, man, but I'd really like to hear. Like, how many trades is that? If you tell me that's any less than like 30 or 40 trades, I'm going to tell you you're oversizing. And if it's 30 to 40 trades, I'm going to tell you you're over trading, right? So again, I hope that was an eval, and rather than 6K of real money or in a brokerage or something like that. So yeah, you're more than welcome to hop in. So I do want to. Yeah, there's, hey, MTV, what's going on, guys? So with that in mind, guys, I'm going to go ahead and open up our mailbag. I did have a question come into the mailbag. Some of these questions, guys, a lot of people have some similar questions, and that's okay. I try not to answer the same question more than about once every 1 or 2 weeks. But so I did have a question specifically talking about my position size. And you can see you saw it. I need to pull that back over. I am traditionally, if I'm trading the indexes, I'm at about 3 mini contracts, right? And this is why I always want to kind of like get on somebody. And I have a feeling that some people that have, larger daily losses are probably doing a combination of both over trading and oversizing. Guys, if you're within your first year of trading, I don't care if you're in an eval, brokerage, I don't care if you're trading your own money, whatever the case may be. My opinion, my not so humble opinion in this business, you should never be trading more than 1 mini at a time. And instead of 1 mini, it should be 10 micros. Well, Matt, the commissions really, if the commissions are eating you up, guys, and you're trying to trade a mini instead of 10 micros, honestly, you're probably over trading. I've said this many times in the show. I'm going to say it again, guys. If the commissions are the difference between you being a profitable trader and not a profitable trader, you're not a profitable trader. Right, so I would much more prefer to do 20 micros than 2 minis, because then I can scale out as many times as I want. Right, I can scale out in 5 tranches of 4, 4 tranches of 5, etc., etc. So again, if you're a newer trader, you should not be trading any more than 1 mini, and I know almost everybody in this room is. Right, so again, I came into futures trading a lot differently than a lot of you. Most of you have come in. Futures trading is your introduction to trading. Not all of you, but most of you, right? And so you are apparently gluttons for punishment. So I started as a small cap swing trader, had some mixed success there, then moved into large cap like options trading, but I was basically using the options to play, I was directional. I did some spreads and sold some credit, but it was mostly directional options playing. Got pretty good at that, and then I moved into futures, okay? So I already had the experience that a lot of you have had, which almost every trader has in your first few months of trading. You just, every day you feel like you just got your teeth kicked in by the market, right? And you start to have a lot of self-doubt and wondering if this is something you can even be good at. And eventually, if you stick around and you don't, blow out all your accounts and your ability to trade, you start to have some inconsistent success. That leads to a little more, et cetera, et cetera. And so I came in very risk adverse because I had already had the painful experience of losing a lot of money when I first started trading stocks. And I didn't lose a ton when I first started trading options. But anybody who's traded options know that, in 5 or 6 minutes, you can be down 50% of your entire position, right? And that's really hard to do in futures, even though the losses can be a little bigger, and very, very hard to do in stocks when you're not, especially if you're playing with the big boys, right? But if you buy a $3 option, and the stock gaps down the next day, you're looking maybe at that $3 option now being worth $120 to $150, or even less than $1, and you're sitting down 50, 60, 70% overnight, right? Like that's, the leverage there is pretty insane. So I came into futures pretty risk adverse, right? So I've now been trading futures full time I have to go back and look at the exact date, but I want to say about 5 to 5.5 years. And it's really just been this year, guys, that I've consistently brought my position size up to 3 minis. For about the past 2 years, I've been very solid in the either 15 micro to 2 mini position, right? So now I'm finally moving on to 3, and it's an adjustment because, I see bigger winners. I also see bigger losers, right? I tried to never take 4-figure losses trades. I think I had 6 or 7 of them last year total throughout the entire year. And this year I've already had more than that because I have a bigger position size, okay? And that's okay because the winners are a little bigger too, but it's a mental adjustment on my part. I used to see a 4-figure loser, it would wreck my day, right? I'm getting PTSD from back when I was trading stocks and I was consistently losing thousands of dollars on a position, okay? So that's the adjustment that I've had to make, okay? So that's really the best answer to that question. And guys, I know a lot of you are going to shrug me off on this, right? A lot of you are going to say, I'm just seeing Club's message up there. 5 minis. Well, I mean that's just too big a position size, Club. If you're now, don't get me wrong. Let me preface this. If you're a more experienced trader who has consistently winning days, maybe that's an appropriate position size for you. But if it's judging by your loss today, that's probably not the case because experienced traders are not going to sit there and take those types of losses. So, that's what personal coaching can do in terms of helping you identify, is this an over trading issue? Is this a, whatever the case, whatever it is, right? I will tell you this though, because I work with quite a bit I've worked with over 200 traders one-on-one over the years, right? Actually, it's probably closer to 250 now. And if you don't have a trade journal, guys, I don't know, I can't help you, right? I've had people, I had a guy, one of the people that bought one of my discounted coaching sessions, that I used to offer during the webinars at Blue Sky, who told me he doesn't keep a trade journal. I sent him a refund. I said, I can't help you. There's nothing I can do because I don't know where the issues are. If you're not keeping a journal, you're not going to be able to tell me, hey, what are your stats on this particular trade? You guys saw on the thing that I have, I always track, am I above VWAP, below VWAP? What's the trading setup? If I make some mental mistakes, I may go in there and make some notes on every trade, right? Now, isn't my trade journal now as detailed and as comprehensive as it was 4 or 5 years ago? No, because I know what to look for. If everything goes according to plan, I'll journal my trades in TraderSync and make sure I'm but I don't necessarily spend a lot of time like I used to, whether it's handwritten notes or making notes within TraderSync, or I used to use Edgewonk, whatever the case may be. So again, just one of those things that you're not going to know unless you are keeping a journal and helping you identify certain things. Like, again, my winning percentage, I know this, guys. This is why I've settled on 3 to 5 trades per day in futures, ideally. Now, some days I'm less than that, like last week. Some days I'm more than that. But I was able to find, because I was pretty consistently trying to do about 10 to 15 trades per day when I first started, right? And the more I got past 5 or 6, the less my winning percentage was. Now, does that mean that I'm sitting here in 5 years from now and I'm still trading exactly as I am now? Probably not. Maybe I'm trading less. Maybe I'm trading a little more, right? So again, just these are the things that you have to keep track of. These are the things that will help you both make your winners bigger and cut down on some of the losers. So hopefully that answers the question. All right, so I got to catch up here. I will say, y'all's 200K static account really helped me mentally. Well, Music Vibes, that's great. And Blue Sky's account with that. Again, some of the things, you guys, not you guys in here, right? But there are so many people, guys, that just come in the Discords, and it's not just Blue Sky, it's other places as well, and just bitch about the rules. Well, if only this rule were different, I would pass. Probably not, right? It's just this rule holding me back. Well, but again, guys, a lot of these rules are in place so that they know whether you're a decent trader or not. If somebody's letting you one day pass an eval, guys, they're just interested in collecting your eval payments and your payment to set up the live account. And then they're going to, it's very easy for, if somebody has 1 million customers and they all pay $800 every couple months in eval fees and setup fees, you guys do the math, right? Then it doesn't matter if they're paying out a couple million, because they're still just putting a ton of money in the bank based on people just YOLOing into various trades. Some of the very good rules that I impose on myself day to day are reflected in some of the rules in the blue sky evals, and especially the static one. Yeah, it's going to be real hard to pass that in a day unless you really, really get a market mover, right? But when you do, you've probably started to develop some good habits. And as long as you don't give those up as soon as you get in the blue live or the brokerage stage, and don't try to, triple or quadruple your position size your first day as a funded trader, you're probably going to be in a pretty good position to, again, especially if it takes you 2 or 3, let's say 3 to 4 weeks, right, of developing some of those good habits, and then you don't change a thing when you go into the blue live or the brokerage, right? You don't change position size, you don't change strategy. Actually, I would maybe slightly decrease position size. So let's say you're trading 10 micros in the 200K Static Plus account, maybe dial that down to 5 just for your first 3 or 4 days in brokerage. Because again, remember, once you're in brokerage, you got to pay data fees, but you're not paying monthly subscription fees. You're not, again, there should never be a sense of urgency, guys, or especially a sense of desperation, which a lot of people bring into their trading. Okay, I scale into 3 minis with a 25 tick stop loss, but also scale out of my position if need be. 25 ticks, especially if we're talking about the NQ there, Philip, is a very, very tight stop loss. I trade 1 mini and increase 1 contract after 15 points, defend my position right away. That's not how I do it, but I know traders that do that add on to winning positions rather than losing positions. It does then bring your cost basis up. There's advantages and disadvantages to that. But if you're consistently profitable with that management style, then by no means there's nothing you need to change. Now, if you're doing all that and you're still not consistently profitable, or trades are reverting back, and all of a sudden you're closing way too many for break even or small losses when you could have closed 1 contract for 15 handle win or something like that, that's something that needs to be reevaluated, right? Bigger position size always killed me, and now I am taking smaller trades and increase if bias goes according to my plan. But if I lose, close for the day. Okay. I mean, again, guys, I'm not going to tell you what's going to work. For me is what's going to work for you. Okay, but you have to demonstrate consistent profitability. And guys, consistent profitability does not mean, well, I was green 3 out of 5 days this week. No, it means week after week, month after month, quarter after quarter. So again, if you're trading a particular management style and you're profitable 100 out of 150 days, okay, now we're starting to see a little bit of a track record. But just because one trade goes wrong, one day or one trade goes wrong, or one day or one trade goes right, does not necessarily mean that that's the right management style. Again, I'm not saying anything you guys said there is good or bad. I'm just saying make sure you're journaling, make sure you're keeping track, make sure after you close a trade, guys, you're watching it for a little bit, because if you're somebody who's consistently getting stopped out of positions, and so you close out for losses, and then the trade would have continued running against you consistently, well, it's your strategy that's the problem and not necessarily your exits. But if constantly you're getting stopped out because your stop loss is too close and then trades are running against you, maybe you have a great strategy, but you're either oversized or you're not giving your trade enough room. Guys, if you're trading the ES, the NQ, the RTY, the YM, the indexes, especially the NQ, guys, the NQ, as I say, is a monkey on meth. Okay, you've got to give it room to breathe. Too many people say, I stopped out of so many trades. What's your stop loss? 20 ticks. Oh, okay, that's a tight stop loss, right? So again, these are all things that screen time and experience are going to help with. Okay, if I'm rather lose quickly and hold on to a losing trade, especially with 3 minis on the NQ. Well, yeah, that's correct, Philip. But again, if you're stopping out at less than an ATR, right, which I do sometimes too. Again, I'm not knocking your specific strategy, but if the ATR is 25 and you're stopping out at 12 handles, right, so from let's say 15. So like 18,500, you go short and you stop as 18,515. That's a half an ATR, guys. That's a rounding error. A market maker sneezes and the NQ goes up 10, 12, 15 points. Okay, so just, again, you demonstrate that that's the right way to manage your trades by keeping a journal, doing analysis, making sure, these trades that I'm stopping out very quickly on would have been bigger losers had I not stopped out. Again, you got to do the work. You have to do the analysis, back test where you can, forward test where you can, and go from there. Well, I think this is a great phrase to end the show on. Smart and simple, make a plan and follow. No matter one micro, one mini, 100 minis, whatever the case may be, trade life. That's good advice. So, hey guys, thanks for the great discussion to close out the show today. We had some good stuff there. Bottom line is, guys, I think we've got a great week of trading ahead. Again, I don't care if we stay within a 100, 150 point range in the NQ or a 20 to 30 point range in the ES. There's plenty of opportunity within that to catch some nice winners, as today proved. So again, guys, I really appreciate you checking out today's episode of Beyond the Bell. We'll be back tomorrow, as we always are. Got a fun week, I think, of trading ahead, guys. The markets are really going to be getting back into movement mode, I think. But if they don't, if they just want to stay in 100 to 150 point range, we're happy with that as well, as long as we get some clear signals. So, guys, have a great rest of your day. Thank you for tuning in to another edition of Beyond the Bell, and I will see you back tomorrow. Good night.